Today I would like to analyze Visa, one of the largest payment companies in the world. They have around 34% from the global credit card transaction. If we take a look at the stock price, we can see a strong performance in the last 5 years, around 94%. So we're going to take a look at the financials to find out if it's a good buy right now. The first thing we can recognize is a huge market cap of 558 billion US dollar. This makes Visa the second largest financial company in the world by the market capitalization. We also have a dividend yield of around 0.72%, which we can see here did grow in a very good rate in the last years. Now we're going to take a look at the financials. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and not a declining business. So we can see here in 2020, the revenue was around 21.8 billion US dollar. This was a 5% decline from 2019, so probably related to COVID. Then in 2021, we had a strong growth around 10%. Then in 2022, we had a very strong growth around 21%. Then in 2023, we had a strong growth around 11%. 2024, we had a strong growth around 10%. So overall, I think in the last 5 years, we had a very good growth, and we can make a check here for the revenue growth. The next thing you're looking for is free cash flow growth in the last 5 years, a very important number because the free cash flow can be used to pay the dividend, to pay the stock buybacks, to invest in the business, and also to pay back the debt. So in 2020, the free cash flow was around 9.7 billion US dollar. This was a 19% decrease from 2019, so probably related to COVID. Then in 2021, we had the 49% growth, so very strong growth. Then 2022, we had a 23% growth. This is also very good. 2023, we had a 10% growth. This is also great. And in 2024, we had a 5% decline. This is something we don't like to see, but overall in the last 5 years, we had a good growth, so it would be a check here as well. I think the main reason for this free cash flow decline is that Visa set 1.5 billion aside for legal issues. If we didn't have this reason, I think we would have seen the free cash flow growth in 2024, so it's not a bad thing in my opinion. The next thing we're looking for is a free cash flow yield over 4%. So this can also tell us about the valuation of this company. The higher the free cash flow yield, the higher the indication for undervaluation. So we're going to take the free cash flow from 2024. This is around 18.69 billion. We're going to divide it with the current market capitalization of 558 billion. And then we're going to get the free cash flow yield for 2024. So the number we get is around 3.34%. So this is not a bad number, I would say. It's still under 4%, so we would like to see it over. It wouldn't be a check here. But of course, we can also expect that Visa can grow the free cash flow in the future. If we make some future assumptions about the free cash flow, we can see here in 2025, the free cash flow could be around 19.5 billion US dollar. In 2026, around 21 billion US dollar. In 2027, around 22.8 billion US dollar. So I think we just take the number for 2027, let's say around 22.8 billion US dollar. Then we're going to take the current market capitalization of 558 billion. And then we're going to calculate the free cash flow yield for 2027 if we expect the free cash flow to be around 22.8 billion. So the number we would get is around 4.08%. So this would be over 4%, so it's already looking better. So I think if we can expect that the free cash flow can be around this number, I think this company could be fair valued right now. The next thing you're looking for is the debt to free cash flow ratio under 5. This means the company can pay back the debt with the free cash flow in under 5 years. A very important number because if a company has too much debt and cannot repay the debt, it can risk to go bankrupt. So now we're going to take a look at the long-term debt first. So the long-term debt is around 21 billion. Then we're going to add the short-term debt as well. So the short-term debt we can see here was around 2.25 billion in 2022. So I cannot see the number for 2024. So we're just going to take the 2 billion then. Then we're going to divide it with the current free cash flow. The current free cash flow around 18.69. So then we're going to get the debt to free cash flow ratio. So the number we get is around 1.23. So it means in a little bit over 1 year, we can repay the debt with the free cash flow. So this is a good number and a check here. We can also take a look at the cash on hand, how much money this company has in the bank. We can see here around 15 billion. So this is a great number. They have a lot of money in the bank and we like to see that as well. The next thing you're looking for is the enterprise valuation to free cash flow ratio under 25. So this can also tell us about the valuation of this company. The lower the number gets, the higher the indication for undervaluation. So what we're going to do now, we're going to calculate the enterprise valuation first. So this is the market capitalization, 558 billion. We're going to add the debt of around 23 billion. We're going to take minus the cash, so this is around 15.18. Then we're going to get the enterprise valuation. This is around 565.8. So this includes the debt and we take minus the cash. So it's how much the company is valued. So then we're going to take this divided with the free cash flow that we had. The free cash flow was around 18.69. So then we're going to get a number of around 30.27. So this is a number with a current free cash flow. So this would, in my opinion, look overvalued right now because the free cash flow is still not growing yet. But we're going to calculate this number as well with the growing free cash flow in 2027. So then we're going to take the number of around 22.8. Then we're going to get a different number. So the number we would get would be around 24.8. So this would be under 25. This is what we're looking for because over 25 is look kind of overvalued to me. So I think if we can expect the free cash flow to grow, this company could be fairly valued. The next thing you're looking for is shares outstanding decrease. This means the company buys back their own shares. We can see it here, repurchase of common stock in 2020 around 8 billion, 2021 around 9 billion, and we can see all these years this company buying back their own shares. We like to see that, especially we think the company is undervalued. So I think it would be a check here and it's something positive that we like to see. I would like to give my conclusion about this company, so let's start with the positive. So we had a strong revenue growth in the last 5 years. We also had a strong free cash flow growth as well. This is something we really like to see. We have a good balance sheet, which means a low amount of debt and a good amount of cash on hand. We have a free cash flow yield of around 3.34%, which is not looking very high, so it could be an indication for overvaluation. But we also expect the free cash flow to grow. So in 2027, it could be around 4.08%. So this would look already better in my opinion. Then we have the enterprise valuation to free cash flow ratio around 30.27. So this would be again an indication for overvaluation. But if the free cash flow can continue to grow, we would have in 2027 around 24.8. So this would look already better. So overall, I think this company can be a good buy, but only if you expect the free cash flow to grow in the next 5 years, maybe even in the next 10 years or 20 years. So then this company can still be a good buy right now. I think this company has a very strong market position. Some people would even say this company has a monopoly. And I think this is also a risk because if this company has such a strong market position, there could be also some legal issues or some regulation. They already had the problem with the United States Department of Justice. So I think this is some risk we also need to consider in the future as well. If you found this video helpful, don't forget to like and comment and subscribe for more content.